Hello, welcome to the What About Taxes workshop. This is for all of you in the future who will be watching this. I have been sick all week, so I apologize if my energy is not quite as excited as it usually is, but I think we can still talk about it and make it fun, and you'll have what you need to be ready for this year. So I'm going to go ahead and get started. Somebody might hop on in the middle. If that happens, we'll see. But otherwise, this will just be here as a resource for you. So I'm going to go ahead and share my screen. All right. Hopefully you guys can see that okay. So our topic today is what about taxes? Now, the first time I ever paid taxes was when I was 16, and that was when I had started my piano studio. I was making money from teaching piano lessons. I call it my first real business at 16 years old. And my piano teacher actually helped me propagate a business off of hers. So she referred students to me. She taught me like the back end admin stuff of how to run a piano studio. But then when I said, hey, what about taxes? She was like, I'm not a tax expert. You're on your own. And so I had to figure it out myself. And that first year that I made money, I had to figure it out myself. And so I went to the library and I got a paper 1040 tax form from the library, along with a little booklet from the IRS that tells you how to fill it out. And I took that home and I read the little booklet and I figured out which line they were talking about. And I did the calculations and I added my Schedule C and I did this and I just followed the instructions and I did the tax form. And as I was doing it in all paper, I did not have the internet. I mean, the internet existed at that point, but we didn't have it in our house. So I couldn't just go online and Google stuff. I didn't have any resources or research books or anything to like go off of. I was literally just reading the little IRS tax booklet and putting it into the tax form. And I remember thinking while I was doing it, like, hey, this really isn't that bad. Like, my parents, the only reference I had for taxes was my parents. And my dad has always been like so stressed out and scared at tax time. And so my experience was taxes are like the end of the world. You will die. Like that level of stress and anxiety. And so I remember while I was filling mine out, I was like, this isn't really that bad. And actually, it's kind of fun. And I feel like it was just like a puzzle. I also, my mom got for my sisters and I these Puzzle Mania books because we were homeschooled. And so she got a bunch of different like extracurricular stuff for us to do. And in the Puzzle Mania books, it had all of these different like logic puzzles, like if so and so is married to so and they have this kid and they're this ages, like how old is this person? And then you have to like figure out based on the information that's given you what the last missing piece is. And I felt like the tax form was a lot like that. Like you have all of these pieces, you know certain numbers, and so now all you just need to do is put them in the right places, and then that gives you the missing number that you need. And so the first time I paid them, I was like, well, this really isn't that bad. Obviously, there was a lot more to it, and I had a very simplistic tax situation going on. I was a 16-year-old person who was still a dependent on my parents. So I didn't have a lot of complications to think about, but the actual doing of it was not nearly as death defying as I was afraid it was going to be. And then when I got to the end of my little tax form, I did owe money. And so I had to write a check because, again, I was doing everything very old school. I was raised by boomers. And so I wrote a physical check to the US Treasury and my amount, which was, I think, like a couple $100. And I was so proud of myself for doing it, for figuring it out, for writing a check, for being a businesswoman that is now able to pay taxes. Like the government needs me to make money so that way it can do what it needs to do. And I felt just so proud of myself that I had accomplished it and that I had faced it and that I hadn't let the big and the scary like scare me away from doing what I needed to do. And this might sound a little bad, so bear with me. But in history, because again, I was 16, I was still in high school. So in history, I had just been learning about the origin of the US Treasury and the history behind when they were setting up the United States and the government and how it all worked. And in the very beginning, when the Continental Congress created the US Treasury, they didn't have any money. And so they had to ask for a loan from their wealthy businessman friend to start, like, put in the capital to start the US Treasury. And so I was like, I am now this wealthy business person who is giving money to like fund the economy. And I just remember thinking like, wow, I've made it. Like I am that big and important person who makes the money that lets the economy run. And fortunately, I've kept that. Even though I've heard a lot of people saying a lot of things and everybody has their own opinions about what taxes mean and the emotions behind it. And if you do look at it a certain way, it can seem like the government is bullying you into taking your money. But you have to pay taxes either way. So if you're going to have to pay them either way, the way I see it, you can either decide that it's a horrible thing and you hate it and you hate everything about it, or you can decide that you're a big shot businesswoman and the government needs you to make money in order to function as an economy. And I would rather believe the happier thing because the end result is the same either way. And I'm going to be happier if I believe this versus getting all upset and believing that. So since I can choose what I believe, I choose to believe that I'm a big shot businesswoman who my making money lets the economy function, which actually is true because according to the IRS, the largest portion of where the government gets most of its money is from the income tax return. Over 50% of the government's like budget and available money comes from individual income tax on the taxpayers. So literally the government wouldn't run without us. They borrow, they have bonds, they have a bunch of other stuff going on, but we are the ones funding the economy. Now, what they use the money for, that is dependent on who's in power, and that goes into politics and voting and like all of that stuff. And there's way more to that side of it that I'm not going to even talk about. But without us making money, the government wouldn't function. So our society needs us to make money. Our families need us to make money, but the larger whole, our culture, our society, our economy needs us to make money in order for things to function. So here's some ways to think about paying taxes that might make it a little bit less ouch. You only pay income tax. Again, in the US, you only pay income tax on profits. So if you aren't making anything, you're not going to need to pay taxes. So needing to pay taxes means you made money. You don't owe taxes if you don't make anything. And then that money that you do make goes to fund your family, and then you give part of it, you entrust part of it to the government. And so the government uses that to fund the infrastructure, roads, utilities, electrical systems, interstates, programs, social programs, welfare, whatever, like all the things that the government does. That infrastructure is what makes business possible. The electrical grid and the internet and like all of that stuff makes especially online business possible, and we wouldn't have that without the larger infrastructure that the government has created. The government made that with our money that we provided by making money. So sure, the government's the middleman, and we can argue about the role of government and whether they're out, overstepping their role or not, but the end result is we need somebody to make these infrastructural things the way our life is set up at the moment. The government does that. And so our taxes make that possible. Plus, depending on, again, what other programs they have going on, it can make your country a more positive place to live. Some very high tax countries like Norway and Switzerland and Sweden and the Netherlands, like some of those places have very high tax rates, but they also have very high quality of life and life satisfaction rates because the people in charge are using that tax money to fund programs that are actually helping people. Again, that goes into politics. We're not going to talk about that. But like your contributions are making your country a positive place to live. And then you can also use tax planning to leverage strategic decisions. So some people, and I've had people ask me, like, if I'm living overseas, do I need to pay taxes in the US? If I travel part of the year, can I avoid paying taxes? And like some of these things I wouldn't do just to avoid taxes. But if you already do want to travel the majority of the year, or you already do live overseas for other reasons, yes, of course, you should be taking advantage, not even taking advantage. The tax system is set up to benefit you in certain situations. And if you have those situations going on, yes, claim the taxes. It's not loopholes. It's not cheating the system. It's not taking advantage of the system. The system is designed to benefit people in certain situations. The tax code was written to encourage business. That's why business expenses are write-offs and deductions. Business people are not evil for writing off their jets. If their jet actually is a business expense, then they don't need to be paying taxes on that large expense. So the tax code was written to encourage and to support legitimate business interests in order to encourage the economy. Because remember, the United States was created by businessmen. The founding fathers of the United States were businessmen. They were tradesmen. Paul Revere was a silversmith. Ben Franklin was a printer. He was also a lot of other things, but his main business was printing newspapers and publications. Sam Adams was, I forget. I want to say he was like a brewer or something. You can look, fact check me. But all of the founding fathers were businessmen. And so when they set up the structure of the Constitution and Congress and like however it all works, they wanted to encourage small business because the ability to make wealth through business is what breaks that ancestral wealth, the aristocracy that they were trying to get away from that was in England. In England, you had families that passed down wealth, and tradesmen or workmen were in a different class, and you couldn't become an aristocrat because aristocrats cared about your birth and your family line. And like, even if you had a lot of money, they were still looking down on you for being a tradesman. And so the American dream was, if you build a business and build wealth, wealth is becomes the equalizer, not your family name, not your noble lineage, not your land that you own or not. It's the ability for anyone to become an aristocrat, basically. So, all of that to say, if you are paying taxes, that means that your business is the real deal. You are now in the economy. You are contributing to society. You are not only doing good work by the services or the products that you're providing, but the fact that you're making money is contributing to society and the economy as a whole. So I hope that some of that stuff helps you think about taxes differently. It's not something that's happening to you. It's something that you are doing for the larger whole, that you are contributing to the larger whole. So let's go into a couple little, I'm going to touch on this quickly, just logistical things. So entrepreneurs or business people owe several different kinds of taxes in the United States. Everybody owes income tax, whether you're an employee or self-employed. If you are also self-employed, then you owe self-employment tax, because when you are an employee of a business, you pay half and the employer pays half of your payroll taxes. When you're self-employed, you have to pay both halves of your payroll taxes. Now, I think you can also usually get a credit, so you can write off the employer half of the payroll taxes, but that's something that comes out later when you're doing your filing. But you still should calculate for the self-employment tax. Then if you are going to owe more than $1,000 in income tax for the year, the IRS wants you to pay quarterly. So you would need to pay out once a quarter whatever you've earned up to that point. In the state of Florida, which is where I live, we do not have state income taxes. That's one of the reasons why there's so many business people moving here from other states. But different states do. So look up your state, your province, wherever you're at. So there might be state level income taxes. There might be county level taxes. There might be city level taxes. And those are all going to the different levels of the governments that you live in. And then if you have taxable products and services, and you can Google, is blank service taxable in blank city, country, county, like where you are. You can Google that if it's taxable. But if it is, you'll need to charge your customer sales tax, hold that sales tax, and then pay that to the government once a month, once a quarter. It depends on how much and what kind of tax it is. Now, very, very simplistically, the tax calculation is your revenue, which is how much you make, your income, minus your business expenses equals profit or taxable income. There's a lot of other things that go into this, but very, very basic, this is how it works. Then your taxable income gets multiplied by your tax rate, and that equals the taxes owed or the tax liability. If you want to know what your tax rate is, you can Google tax table for year, or if you want to be saving this, which is what we talk about in the Worry Free Money Challenge, if you want to save that amount of money ahead of time, then you can put this into ChatGPT, or it's called Tax Pro is the specific GPT. They give you basically the same answer, but Tax Pro might be a little more specific. But you could put that into ChatGPT, Perplexity, Gemini, your robot friend of choice, and this will calculate a percentage for you as a target to save towards. And that's what we talk about in the Worry Free Money Challenge, and saving that ahead of time so that way you have the money to pay the taxes with. So our key takeaway for this is that nothing is sure but death and taxes, so you might as well make it fun. So I have a Taxes in Plain English handout, which I will be giving at the end of this. It will also be in the classroom where I host this workshop. All of these handouts will be linked there as well. So the Taxes in Plain English handout shows all of this, how it's calculated, and that you're not taxed on what you make, you're taxed on what you keep. That is a very key distinction, and that is why everybody talks about maximizing their deductions or writing off everything possible, because the more that you could claim as a business expense reduces your amount of taxable income. And so if you legitimately can say that everything that you made was spent in legitimate expenses, then you wouldn't have any taxable income, and then you wouldn't owe any taxes. And that's where people that don't understand how the tax code works gets all, oh my gosh, evil business people aren't paying their fair share because they don't have to pay any taxes. This is how the tax code is written that way. It's not cheating. It's just using the system the way it was designed to be used. Okay, so what can you actually write off? Again, writing off means you're taking it out of your taxable income and you're deducting it from your taxable income. So what counts as a business expense? According to the IRS, a business expense is one that is both ordinary and necessary. So ordinary is one that is common or accepted in your industry. Necessary is one that is helpful and appropriate for your trade/business. For example, a marketing campaign is necessary because it is appropriate and helpful for attracting customers, even if the business could theoretically survive without it. You don't have to run ads, but running ads does increase your chances of getting more customers. So it is ordinary to run ads, especially for coaching or online business services. It is ordinary to run ads, and it's also necessary because you need customers for your business. And so you can say that running ads is ordinary and necessary. Now, here's some important considerations that go into ordinary and necessary. The expense must be reasonable in amount. If it's unusually large, that can trigger, because the IRS does use some algorithms now. So if it's a large purchase, it can trigger a flag, and then that might trigger an audit, depending on if the person reviewing it decides that it needs to be audited. And the IRS closely monitors for personal expenses that are misclassified as business expenses. Now, this is where the sketchiness and the tax fraud and stuff happens, because we're incentivized to claim everything possible as a business expense, because that reduces our taxable income. People will claim things that aren't really business expenses in order to reduce their taxable income. That's tax fraud. That's not okay. We're not going to do that. I'm not encouraging you to do that. I'm not telling you that you can't. Don't do that because they check, and you don't want to be caught cheating, because if you're caught cheating, then you're going to owe back taxes plus interest. And that's where you get a whole bunch of fines, and you owe them your firstborn child, and it's really scary. So, above board, always, but we're going to make sure that personal expenses are not misclassified as business expenses. If there are things that you use for both, like your car, your phone, your home office, your laptop, whatever you're using for some business things and some personal things, only deduct the portion that's used for business. There's a couple different ways to do that. The most popular one is to say it's a back of the napkin guesstimate, but it's like, I estimate that out of the time that I use this laptop, per se, the one I'm using right now, I use it for business 98% of the time, because I only get on here to do personal things like once or twice a month. And so the cost of my laptop, the cost of the electricity to run it, the cost of the internet that I'm using, I would total all of that up and then deduct 98% of that total. That's one way to do it. Now, the other consideration is substantiation. You can't just say, I use this for business. You need to be able to prove that you used it for business. So you need supporting documentation, which are receipts, invoices. You need to be able to clearly explain the business purpose, especially for things related to travel, meals, and gifts, because those are the things that are the most nebulous in, was it really necessary or ordinary? If you have pictures and screenshots or even video footage, that's even better. One of the examples that I've heard is of a lady who was writing off her yacht as a business expense. Of course, that got flagged because a yacht is a huge expense. It got audited because yachts are usually pleasure vehicles. And so the auditor came and talked to this lady's tax person, and the tax person was like, no, she is a realtor, and she shows properties to her clients, and her clients are really, really, really high-level celebrities, like Shaquille O'Neal. I don't even remember other people that he mentioned, but when they want to buy a property, they want to see what it looks like from the waterfront. And so she will take them out on her yacht to show them the property from the waterfront. And she had pictures of her with all of these celebrities on her yacht showing them these properties. And that was the end of the conversation. The auditor was like, okay, thank you very much. That's cool. Also, she really met all of these people, and they started talking for fun. That's all that they needed. They just needed to be able to prove that she was using this for the purpose that she said she was. She had proof. She had receipts. She had all of that in place, ready to go. That was the end of the conversation. So you need to be able to articulate all of this as well. So ordinary and necessary, that's Googleable. A lot of this comes down to opinion and interpretation and whether or not it really is ordinary or necessary. And so if expense gets called into question, say in an audit, you need to be able to articulate why you said this was a business expense. So if you're not sure, if you don't think you could explain to an auditor or to a court or to a judge why this is a real business expense, don't claim it. There's plenty of tax deductions and tax credits. You're going to be able to reduce your tax bill in very legal, above board ways. So don't put yourself in a sketchy situation where you don't know for sure if you could defend it. I also have a resource here that I will link, which is like a whole checklist of different things and resources for you to understand what the IRS classifies as business expenses. And so that will give you some more context if you're interested in looking that up. But categories of common deductions are software and tools. So this is everything that you use to run your business, your school account, your Canva, Loom, Shopify, QuickBooks subscription, your home office and utilities. So we work from home. We're paying electricity, we're paying rent, we're paying water, we're paying gas, we're paying all of these things. And so, like I said before, you can deduct the percentage of your maintenance expenses. And this includes cleaning supplies. If you hire a cleaner lady to come and do your cleaning for you, repairs and maintenance, all of that stuff, which is down here in this spreadsheet. I'll talk about that in a second. Contracting payments, if you hire freelancers, editors, VAs, subcontractors, all of that stuff. Ads and marketing, professional services, memberships and dues, continuing education, and then bank fees, processing fees, for when you're making money and they take that processing fee out. That is, the processing fee is an expense because you're paying them to process the money for you. And so you can count all of those fees as well. Now, the things to be careful with and really make sure that you're being above board in claiming them as a business expense are things like travel and meals, or if you're going on a trip and part of it is for business and part of it is for pleasure, you want to make sure that you're not claiming the whole trip, that you're just doing the business part. So here's another resource for that. And then we need to be tracking all of these things so that you have very clear numbers to work with when it comes to filing your taxes. So we are talking about taxes, we're talking about filing. Filing is when you're actually sitting down and you're plugging numbers into a form, or you're doing it through TurboTax or whatever. You need to have all of this other stuff in place ahead of time because you don't want to be doing all of your bookkeeping for the year and all of your figuring things out and cleaning up while you're trying to do your taxes. You want to have the cleaning up and the bookkeeping done first, so that way you have all of the numbers, and then you can just take all of those numbers and plug them into your tax filing. So the best way to track this is with accounting software. I personally am a QuickBooks Pro advisor, so I recommend that one. But I've also heard good things about Wave and Xero, and FreshBooks is also out there. I don't personally know much about anything but QuickBooks, but QuickBooks is a very solid solution for a lot of businesses. It's, I think, the most popular one, according to them anyway. But do your own decision. I'm not going to try to push you in either way. But you do need something to track with, whether that's a spreadsheet, an accounting software, because you do not want to have to do all of it at once. You want to be able to do it every month. And that's something that we do here in Avocado Entrepreneur as well, where with our bookkeeping parties, where we go through every other week and we just categorize our transactions, we reconcile our accounts, we do all of this data entry stuff on an ongoing basis. So that way at the end of the year, when you need to file your taxes, you don't have to do all of that and then file your taxes. So the takeaway for this is don't play chicken with the government. If you can't substantiate it, if you can't explain it, if you can't articulate it, don't claim it. Just don't. So we have two resources here, what counts as a write-off, and then your home office deduction spreadsheet. So I'll show you that here really quick. So as you go throughout the year, you can enter the totals for all of these expense categories under the month. So let's say your rent is $600. Let's say your rent is $1,500. Your electric bill is $120. Your water bill is $65, $85. Cool. I don't have gas, so I'm going to leave that alone. The internet's $45. If you pay for trash and recycling separately, I don't know. We'll just make up stuff. Home insurance a month, let's say, is $145. Repairs and maintenance. So this would be stuff like if you need to fix the fascia board on the outside, if you hire a plumber, or if you get your windows washed, that kind of stuff. So we'll say $125. Cleaning services, again, if you hire someone to come clean out your gutters, hire someone to pressure wash, hire someone to clean the windows, hire a maid to come and clean inside. We'll also just make up numbers. When you buy cleaning supplies, cleaners, laundry detergent, maybe laundry detergent, cleaners for sure, mops, soaps, that kind of stuff. We'll put that in there. Property taxes, this would be by month. So usually you pay your property taxes at the end of the year, but we'll divide it by month. So we'll say HOA fees if you have them. I'm guessing that's probably also about $100 something. If you pay for a security system, like subscription, whatever that would be. Cool. So as you can see, this adds it all up. So if we do some more stuff in like February, I'm literally just I'm just typing numbers. I'm like go chicka, but with numbers. So you can see that it's adding it up here. And then your home office percentage is where you will calculate the square footage. This is the easiest way to do it. So you take the total square footage of your house, and then you take the square footage of the area that you use as an office, and then you calculate the percentage, how much of your house is home office. So let's say, for sake of ease, that your house is 1,000 square feet and your home office is 10 square feet, then your percentage, your home office percentage would be 10% of your square footage. So if our square footage is 10%, then our deductible amount would be 10% of the total, which in this case would be $300. So you would need to like know the square footage of your house and know the square footage of the area that you're using as an office. But then you can put that information in here. Once you've entered the square footage, you can hover over it with this little star right here and drag it down, and then that enters that amount for the whole row, and then it will calculate. And so this deductible amount goes here, and then we will also need total sum of all of that gives us this much deductible home office deduction dollar amount, and then this is what you would put into your tax forms when you're actually calculating your filing. Cool. Okay. So let me get rid of all of that. Yep. Backspace. Coolio. All right. So that's how you would do that. Okay. So some things to consider before the end of the year, because almost everybody is on a cash year cycle. From January to December is your fiscal year. If you have a separate fiscal year, you'll know because you have to say so and like think it out and declare it. So if you don't know, it defaults to the calendar year. So December 31st is the end of your fiscal year, and you would need to do certain things before the end of the year if you're on cash basis accounting. So cash basis accounting is where you get credit for what you do when you actually get the cash or give the cash. So if you buy a thing, then you get credit for the expense when you spend the money. So if you do have some things to spend, you want to do that before December 31st. That way you get credit for it in this tax year. So you would need to pay any outstanding contractor invoices. If you have the money, don't go into debt, but if you have the money in your OPEX, or if you have it in profit and you want to reinvest those profits, you can buy equipment that you'll need. So if you need a new laptop and you have the money, you can buy the laptop now and then that will count towards this year's tax bill. If you have investment or retirement accounts that you want to make contributions to, a Roth IRA, a health savings account, if you have a 401k, there's all kinds of different accounts, but if you have them and you want to contribute to them, you can do that before December 31st. Most of them also have like so long into the next year that it will still count for this year. So this one isn't as important to do before December 31st, but it's a good idea. And then if you need to estimate your tax payments, if you're going to owe more than $1,000 in income tax for the year, then you need to be able to pay your 2025 fourth quarter taxes by January 15th. They're due January 15th. Your annual income taxes are due April 15th in the US. Now, do not go into debt to try to save on taxes. Legitimate tax planning can save you money, but you're not going to try to reduce your tax bill down to zero. This isn't like golf. We're not trying to pay zero. We're just trying to pay what we actually owe. And the system is set up for us not to owe that much, all things considered. So we just want to make sure that we're paying what we owe, no more, no less. So don't panic about it. Don't decide to do a bunch of crazy, weird shenanigans to try to get your tax bill down to zero. Just do what makes sense for you, and then the taxes will work themselves out in the wash. I have a prep checklist, so that way you know what you need to have in place before you sit down to file your taxes, and that will also be linked. So then when you're ready, you need to, so for next year, for tax filing, we need to catch up all of your bookkeeping before. Like I said, we don't want to be doing the bookkeeping and the accounting while you're trying to file your taxes. If you're doing it, it's just too much and it's going to take 3 days and you're just going to feel overwhelmed and super stressed and it's like, oh my gosh, I hate taxes. Well, it's not really the taxes, it's the fact that you're having to do all of this other administrative work in order to get the numbers you need to do your taxes. So if you do that administrative work separately, sure, that can be stressful, but it's not all at once. Now, if you're hiring a CPA or a tax preparer to do it for you and you haven't done any of this, they also have to do all of that before they can file your taxes. And that's why tax season is like the Super Bowl for accountants and CPAs, because a lot of us have to do all of that cleaning up for people before we can actually file taxes. So if you get all of that done ahead of time, then you can hire someone to just file your taxes, and it will be a lot cheaper than if you hired them to do your bookkeeping for the year and file your taxes. So you can hire separately for those things, or you can do part of it, or you can hire someone to do part of it and you do part of it. There's a lot of options. If you have questions, just let me know and I will be happy to help you work out what you can do yourself and what you should hire for and all of that things. So you will need a software or a system to do your bookkeeping. You'll need to organize your receipts and your proof, your supporting documentation for your expenses. If you have like a software like QuickBooks Online, you can attach the file, the PDF file or the image file of your receipt. You can attach it to the expense. And so if an auditor is going through your books and they're like, what's this? They can pull it up. They can see an image of the receipt. It's all right there. You don't have to go hunting for it. It's literally like paper clipped to it. If you don't have an accounting software system, you will need a really solid folder system in your computer or in your storage, like cloud storage, whatever you use. You want to be able to find them quickly in case you need to. And then the other thing to consider, which I put this kind of in the middle, this is a side note, but if you aren't ready to file your taxes on April 15th, you can get an extension to file, but you can't get an extension to pay. So if you owe something, getting an extension doesn't mean that you have more time to pay. You still owe the taxes by April 15th. So you still need some kind of rough idea of a number so that way you can pay that and then do all of the paperwork and figure out the stuff and then maybe get something back when you actually do the filing of the paperwork. But the extension is just for the filing. It's not for the paying. So make sure that you get your payments in by April 15th. The documents that you need to file are all in this handout right here. So these are the things that you'll need to catch up before you do, the documents that you'll need with you when you sit down, either when you take your stuff to a tax preparer or you sit down to do it yourself. I have used TurboTax for the last 5 years, so I recommend that. You can file your own taxes. You can sit down with a paper form from the library like I did when I was 16, but TurboTax makes it easier. So the things you'll need with you are profit and loss statements for the year. You'll need any other income sources. So if you got a 1099, if you did client work, subcontractor work for someone, if you were an employee at any point during the year, you'll get a W-2 from your employer. So you need all of that for your income. You'll need your bank statements just to confirm that income actually came into your bank. You'll need your home office totals. So you'll use that spreadsheet that I showed you earlier. If you have been making tax payments quarterly throughout the year, then you'll need the amounts that you've paid, so your confirmations, to show that you've actually been paying taxes. Then you'll need interest statements from banks or investment accounts, and you'll need those retirement account statements from all of these places to show what you've contributed, because some of them are like pre-tax investments, and so they'll reduce your taxable income because you put that into a pre-tax account. So you'll need something that shows you how much you've contributed throughout the year to these kind of accounts. All right, so that's the list of things that you'll need with you when you try to file. These are the things that you need to do before you sit down to file. So that way you're not doing it all at once. Cool. Okay. And then if you do want to hire someone to help you with any part of this, I have this little checklist here. You want to make sure that whoever you pick for whatever purpose works with entrepreneurs, understands your specific industry, so online or digital business models, that they're going to explain it to you and help you understand the strategy behind what they do. They're not just plugging in numbers and growling at you. Like they're actually helping you understand it and explaining it to you. And then if you are hiring someone who's going to help you on an ongoing basis, you want someone who will support other things than just data entry. So like if you need to register your tax account, to pay sales taxes or to pay quarterly taxes, you would need someone who can help you do that, who can help you register your business, who can help you with notarizing papers if you need it, like stuff like that. Now, the thing that I put in here is that there's a lot of different kinds of tax professionals and they all do different things. And so this is kind of a glossary as well as helping you know who to look for each specific thing you might need to hire for. So a bookkeeper just does the data entry. They're categorizing your transactions, they're reconciling your accounts, they're doing a little cleanup. It's like the basic level. An accountant runs reports, provides financial statements, does data analysis, does metric analysis, can do cash flow forecasting. A lot of accountants will also do bookkeeping, but you can hire a bookkeeper that just does the bookkeeping, and then you can hire an accountant to do just the accountant part. A CFO or a fractional CFO is the strategic, like overseeing role that helps maintain compliance, sets up your financial systems, does strategic planning, helps you interpret your numbers, helps you decide, like, can I afford to hire somebody? That would be a CFO question. If I do hire someone, how much can I afford to pay them? That's, again, a CFO strategic question. So some people do all three. I do all three. My firm does all three. I do bookkeeping, I do accounting, and then I also do fractional CFO. So when my clients hire me, all of these three things are included in each package, and the packages are based on the client's business level. I don't separate them out. A lot of other professionals will separate them out. You can hire for bookkeeping, then you have to pay more for accounting, then you have to pay more for CFO. I do all three and then charge based on the level of business that you are at, because you need different things at different levels. Now, tax preparer and tax strategist are different from those things. Some accountants, like CPAs, will also do tax preparing. Some people just do tax preparing and they don't do any of the bookkeeping stuff. And so if you're going to hire someone to help you clean up your books at the end of the year and do your taxes, you need to make sure that they can do the bookkeeping and the accounting and then also file the taxes. You might be able to hire someone to do all of this and then you file your own taxes, or you might do all of this and then hire them to file your taxes. So the preparer and the filer is going to take all of those numbers from the accounting and the bookkeeping, and then they're going to actually file the taxes according to that data. The tax strategist or the tax expert or the tax planner is going to advise you on decisions like, do I live overseas for how long and how much taxes will I pay or not pay? And do I still owe even if I live overseas for this much longer? Or if I buy my big equipment now, is it better to buy it now or is it better to wait until next year so that way my tax burden is less? Like those kind of questions are a tax strategist thing. And that can be, again, the same person can do both of these things or they can be different people, but these are different roles that you can hire for. Questions to ask when you're interviewing or considering anyone is what's included, what all do you do out of these options, and there's more financial things beyond this, but we're sticking with bookkeeping and taxes right now. So what do they include in their services? Do they just do one thing? Do they do a couple of things? If you want them to do something else, is that like an additional charge? Do they offer monthly or quarterly coaching? Is that part of the package? Is that an add-on? Do they also file the taxes? And then what documents do they need from you and how often, so that you can make sure that they're getting the information that they need. None of us professional finance people can do anything without the information from you. You are the one source, the source of truth, so to speak. Like we need you to give us the information to be able to do our jobs. So this is like music to our ears of what, like knowing that you are actually involved in this. You're not just trying to pawn it all off on us because it's not our business. It's your business. Like we need you to be invested in and understanding and taking responsibility for these things. So yeah, just asking that will make them fall in love with you so fast. Okay. So we don't have any questions at the moment because there's nobody here to ask questions. So if you have questions, go ahead and put them in the comments of the replay or DM me if you feel more comfortable asking me privately. Go ahead and ask any of those questions. And then if you do want help with your 2025 bookkeeping, catching up your bookkeeping, or if you need to set up an accounting software from scratch to do your bookkeeping for the year, just go ahead and DM me. My firm / me would be very happy to help you with that. And we can talk about all of the things that are included in my fee. So that is the end of our little workshop right here. So I hope that helped. It wasn't even more confusing than before. If it's as clear as mud, go ahead and put that in the comments too, and I will do my best to make it more clear the next time I teach this workshop. But I appreciate you in the future watching this, and I hope that this helps you and your business so that you become a big shot businesswoman and and prosper and make money and support your economy and the larger whole of the place that you live.